Hey, what's up, everybody? Prax, welcome in. You're always the first one to comment, aren't you? I think for the past, at least 2 or 3 weeks, you've been the first one to comment on these live streams. I'm doing great. I'm ready to trade. I'm ready to get back into, hopefully a good market. We'll see what happens. Last week was pretty good. I feel like we did all right. We did okay, given the situational gap ups and gap downs. The watch list did good. It was tough, man. It was really tough to do analysis. Yeah, I mean, it was like, I would look at all these charts and setups at nighttime, and then by the morning, none of them were still relevant. So it made for an interesting week, to say the least. Rolo, welcome in. Juan, hey, how you doing? Welcome in. All right, we're going to get started. To everybody, if it's your first time or if you're returning, welcome to this week's watch list review with Spartan Trades. Disclaimer, I am not a financial advisor. This is not financial advice. If you're new, again, welcome in. You're in the best place to get an idea of the top plays for day trading options. Everything that I talk about is for potential day trades. I have a very systematic and methodical approach for picking my watch list stocks. I really do pride myself in being able to help others focus in on those opportunistic setups, especially the people within my Discord server. You guys have been killing it lately, especially following the watch list rules and following the way that I kind of train everybody to trade within the server. I mean, it's been awesome. I think I've seen more profits posted this month than I ever have in our Discord server. So that's great. Even on days where the market's not as hot, we've still had some really good plays. You guys caught Facebook on Friday, and that was one that I didn't even need to call it out because everybody was all over it. You know what I mean? So really great job. I'm proud of all of you. I am on the, I'll delete this here. We're starting. I am on the daily chart time frame here. So there's the daily chart for /ES. Okay, this is the future that SPY follows, and it basically gives us insight as to how the overall market is moving. So last week, you see we pushed up to new highs actually, but never sustained the move. And so it was kind of, this pullback was kind of like something that was expected, to be honest, because we had this major rally off of this 50 EMA dip and pushed up into new highs. And then once we got up here, it was like we were barely making new highs. You know what I mean? It wasn't like a breakout into new highs. It was we were barely making new highs every day, just a little bit at a time. And then so we basically stopped this increase, right? If we drew a trend line, we stopped the slope of that increase and then started to kind of consolidate and flatten out. And then so now the trend looks like that, right? So you see the curve there as it's occurring. That's not something that was very surprising to us and shouldn't have been surprising to us. I think this was a scenario that we painted last Sunday, right? So it's nothing that really should have caught us off guard. There were just all kinds of weird moves overnight with big gap ups and big gap downs, and that's what made the analysis really tough. So if you were green last week, then you should really be proud of your trading because even the opportunities that looked good, they just didn't pan out really the way that we thought that they would. So to be honest, this week I do expect more ranging on the overall market, just kind of given where /ES is at currently. So we are below the highs. That's what this trend line signifies, right? That's the trend line for the highs, 3978.5. So we're below the highs now, and we're just above this 50 EMA. And why is that significant? Well, because this 50 EMA has been treated as a support on the way up, right? It wasn't treated exactly as a support right? It was mainly like this 21 EMA on the way up, but then once we broke that line, that's where the 50 EMA stepped in. So not once, but twice it's kind of been validated as a support. So with us trading kind of right in the middle of the highs and the 50 EMA support, I think it's possible for us to do something like this. Like I just wouldn't be surprised to see that happen. If we break out into new highs, so let's just say that this doesn't happen. If we break out into new highs, obviously that's a bullish sign. And then to the flip side of that, if we break that 50 EMA and break that support, that's going to be our bearish signal. So if neither of those two things occur, if we don't break out into new highs and if we don't validate the 50 EMA as a support, that's kind of where I'm deriving this notion that /ES and the overall market can likely range trade this week. Okay, simple analysis. I feel like either we make a new high, either we validate the 50 EMA as a support and range, or we fail to hold support and come down further. Those are just three scenarios that I'm kind of painting for you all. Make sure that you have a general plan for yourself for each scenario. I don't know what's going to happen, and it's not really my job to guess what's going to happen. All that we need to do as day traders is identify what's currently happening and then adjust to it, right? So, if we're moving up, we want to kind of be on the long side. If we're coming down, maybe we want to be on the short side, or finding stocks that are showing relative strength. So, as for the overall, or as for the watch list for tomorrow, this is the part everybody loves and wants to get to. I don't have a lot that I'm going to talk about that's going to be on the main chart, but I do have, or the main watch list, but I do have a lot of stocks that I'm going to talk about that are potentials for the main chart watch list. So they'll be side charts for now, or they're going to be what I call side charts. Basically, we're going to set alerts on them. And those charts can be substituted as a main watch depending on where we open up at. So the first one that I think for sure is going to make the main watch list, the main chart watch list, will be XPEV. All right, so it's here's a little bit of a rundown on the stock. It's recently sold off pretty aggressively, right? Obviously from the highs at 74 all the way down to 28. You see the RSI was recently oversold, which doesn't really matter. In a trend that's parabolic, and I mean this wasn't really parabolic, but I guess on the way down was pretty strong. And then it wasn't until recently we got the MACD to cross over and give us that true kind of like validation and verification that the trend has changed. So what we've done since then, though, has just been consolidating here above this 200 EMA. If you don't know, a stock trading above the 200 EMA on the daily chart time frame is considered to be in an uptrend. And a stock trading below is considered to be in a downtrend. So what I like is that while it fell below, it has recently reclaimed it and has started to consolidate here. So on Friday, there was a break of this consolidation area on this candle right here, and that occurred on higher volume. So what we are looking for is a continuation move from here on this range break. This is considered a range break play. You can also consider it kind of validating the 200 EMA as a support. The next kind of major level of resistance is going to be around $40, but we need to keep in mind that the 50 EMA is also a level of resistance, and that's going to be right at around 39.2, so we might as well just say $39. Okay, from where we are currently trading at, I know I'm zooming in really close on this, but it's important for you to see a move over $38 up to 39 gives us about a 2.6% profit margin, which this stock can make that type of move very easily, right? In fact, it can make a 5% move pretty easily, but all we need is a 2% move. So if you are ever looking for a decent size profit margin, just know that 2%, if you're trading weekly options, 2% profit margin is typically or generally enough to yield a 20% profit on, depending on if you're not too far out of the money on your strikes. So this is all that we're looking for. Move from 38 up to 39. Very simple, I know, but I think that it's kind of a safe play and gives us a little bit of room here for validation. So a move over 38 for the run up to 39. That was ticker XPEV, first one on the main chart watch list for tomorrow. The second one on the main chart watch list is DKNG. I really like this setup. We talked about this setup last week, and it just never got to where we wanted it to get to, which was above 74.09. That's going to be your highs, right? What it is kind of giving me here is, I see a few things, actually. And I don't know if this is a bit of a stretch, but this pattern that I'm drawing out right now, that is known as an ascending triangle. What it is a series of higher lows. So there's your low, your higher low, and then your higher low, all compressed into one single point of resistance. That's going to be at $72, right? Without regard to these wicks that are popping over. All compressed into one point of resistance. And the idea is that when we break this resistance, you get a larger move, breakout continuation play topside. And with this being at the highs, that is something that is really looking juicy for this week. Plus March Madness is a thing too, right? So DKNG may have the potential here to break $73, $74. Well, 74 is the trigger. That's what we'll be looking for. A break over 74 and run into these highs. I also see a bit of a cup and handle formation. So that's going to be your cup right there. This is your pullback for your handle. And then this can be kind of validated as a breakout, right? So if you don't see what I'm talking about, I'll delete these lines and draw it out for you. No matter how you look at it, it does look like it's ready to go from here. So a play over $74 is what we're looking for. If you don't mind a little bit more risk, you can take this long over 73, anticipating that break over 74, but just know that 74, with that being the highs, that's going to be your next kind of major level of resistance, your likely level of resistance. So essentially, if you're taking it over 73 up to 74, remember we talked about having that 2% profit margin. You're at 1.2%. So you're limited on profit margin, but if it breaks, it could pay off for you. Does that make sense? So it's however you want to play it. I personally don't mind waiting. I like to have that extra confirmation, and for the sake of me putting out a watch list for the entire team, I prefer that they also wait for confirmation. So a break over 74 is going to be that'll be my entry, I believe. The third one on the main chart watch list is going to be AAL, okay, AAL on the daily chart time frame here. So this has a gap just below $24 down to 23.5, which isn't really relevant, but it is kind of relevant because if you're doing technical analysis, you should know that a gap, this disconnect from this wick to this wick, a gap area acts as a natural point of support and resistance, both sides of the gap. Right, so it did partially fill the gap down on these wicks right here, but it is overall validating this gap area as a support. And so what it's done is started to build a range right here, with support being around 24 and resistance being around 25.3. Okay, over 25.3, we see it twice now. It's ran up to $26. So that's going to be our entry point for tomorrow. Remember, we're looking for a 2% profit margin. So that's giving us 2.6% from 25.3 up to 26. That'll be the move that we're looking for. This is going to be a range break play, much like XPEV. The only difference is that AAL hasn't broken the range yet. So we don't have confirmation here on higher volume like we do on XPEV. But this is still, it still has a chance to break the range and go, right? So the other side to this play would be a short idea below $24. Because it's trading closer to the $25 mark, I don't think that a short is really relevant right now, but who knows, right? This thing could gap down tomorrow and be opened up at $24 and maybe fail to hold 24 as a support, and then you get a gap fill. It's totally possible. I've seen something like that happen before, but as of right now, just kind of given or looking at what we're given at this current moment, it looks like a long idea over 25.3. Okay, price target 26. Again, that's AAL on the daily chart time frame. So that is it, guys. That's all that I have for the main watch list. I know I told you it was going to be short, and it is short. I have side charts that we're going to talk about, and all of these are relevant, so you should stick around for those because any of them can make the main chart watch list. But just a quick review, those three plays are going to be XPEV. We're looking for a range break. AAL, we're looking for a range break as well, and then DKNG, looking for an all-time high break. Remember, you don't need to go crazy with a lot of plays. You only need 1 to 2 A+ setups to grow your account. I preach that all the time. So sometimes it's better for you to focus on less, right? You want to take quality plays over quantity plays. But I'm still going to give you some side charts and side chart ideas just in case these three plays don't pan out the way that we think that they will. So while I'm talking about these side charts, feel free to post up in the chat section right here anything that you want me to review. But I do ask that you please review the watch lists, or please post the review tickers, just like how I'm mentioning these watch list stocks. Give me a couple of levels of importance, and then maybe a sentence or two why you think the stock deserves attention and has potential. And please don't bring up any penny stocks. I don't trade penny stocks. Nobody in my server really trades penny stocks that I know of, and they're just kind of tough to do analysis on. Most of them to me are pump and dumps. So I'd rather not talk about penny stocks. I will, but yeah, I think there's better analysis to be done on larger caps. So side charts. First one on the side chart watch list, and congrats to my team for calling this one out Friday. I mean, you guys did an amazing job. Facebook, on the weekly chart time frame, or even on the monthly chart time frame, this is a massive bull pennant pattern, and there is your breakout. You see that? So this on the daily chart now, we're going to move back into the daily. On the daily chart, it was making lower high, lower high, lower high, lower high, and now we have a higher high. So if this pulls back, I would expect it to then make a higher low and continue up. The next major level of resistance from where it's currently at is going to be around 300. I think it probably will meet some resistance right here at like 297 first, and then definitely some resistance at 300, and then above that 304. Okay, from where it's at right now, I would not be surprised to see this move here retrace like at least a little bit. I don't know. There was some big volume right here, and so this is why this is a side chart, because in my opinion, I don't think that this move from 250 up to 290 sustains without some sort of pullback. You see the trend line right here? That's a pretty steep trend line for this to move up. So I would expect to see some sort of pullback and consolidation. I would like to see some sort of pullback and consolidation before this continues up. However, if that doesn't happen and it breaks, this high at $293, there's a possible play there up to 300, because maybe, just maybe, this has the potential to continue to run. Following, it's just now breaking out, right? So following this kind of volume day, this may still have the potential to continue to go. And if that's the case, we still want to be on top of this play. So for me, I'm going to have my alerts set at $293. If that breaks, I'm going to look at possibly taking a play on Facebook with a price target of $297 to $300 in mind. That's right at about 2% there, 2.4%. If we took it up to 297, okay, so that's a 1.5%. Up to 300 though that's kind of the bigger price target in mind. All right, so if it gets going over 293, that's where I would want to see it kind of run to. If it doesn't get there, again, this is a side chart watch, so if it doesn't break 293, then there's no harm, no foul. It pulls back, let it do its thing. We want to see it really maintain this level of that was resistance here. We want to see it maintain this as new support, which means I don't think it should drop below $280 on a dip or any bit of consolidation. If that's the case, I would, I would be more hesitant about taking this as a continuation play. All right, over 293 is the area to set your alert, though. The next one on the side chart watch list is going to be PLUG. So I put this one out to the server multiple times last week, and nothing has changed here as far as our analysis goes. So there was, kind of a stronger sell-off here. Actually, it was a double gap down. This gap's not that big though. But yeah, so it was a double gap down, and a little bit of a recovery day here, and has since kind of started to base. So I had a green day, and maybe on the path to recovery to fill this gap, or maybe it just continues to reject. Right? I'm only going to trade. I know there was like negative news. That's what has caused this sell-off. But I trade the charts, and if the chart's telling me that this is breaking $40 and filling a gap, that's going to be, I don't have any problem taking this long into the gap despite whatever news it is. That's the beauty of day trading. You can trade against negative news if the stock price is going up. So over 40 up to 42 is a 5% profit margin. So you don't need it to fill the whole gap, right? You really only need it to move like a dollar. 40 to 41 is a 2% profit margin. This can make a 2% move in its sleep, right? You see the average true range here is over 2%. All right, so a way you can test that is just draw yourself a trend line and then compare this trend line to like all these other candles. And if it's smaller, that's how you can kind of see your true range. Yeah, over 40 though. This is a gap play over $40 up to 42. The reason why it's a side chart watch is because it's not even trading near 40 right now. In fact, from where it's currently trading up to 40 is enough profit margin to take a play on in itself, right? But we should stay patient, not jump the gun. Don't anticipate it to break into this gap area, because what did we talk about earlier in the stream? Gap areas are like natural supports and resistance points, both sides of the gap. That's why you see two trend lines here on my chart. So alert set over 40. Wait for it to come to you, right? Wait for that setup to come to you. AMC. This has been one that we were also watching quite a bit last week for a break over 14.5. We just couldn't get it. It just could not get there. It looked good a couple of times and could not go, right? And actually it's kind of down after hours here. I want to definitely keep this on watch this week because AMC, they call them the meme stocks, it's made runs with GameStop, with GME, and GME has earnings this week. So could be, it's weird to say, but there could be a sympathy play off of GME for AMC. Keep your alerts set at 14.5. I know it's sold off right now. That's why this is a side chart, because the beauty of a side chart is you just set your alert and forget it. And if it breaks that price point, then you have a play. This can get really interesting over 14.5 because the next kind of major level of resistance is going to be around 16, 17, and then up to 20. And that is a fat profit margin. You're looking at 9%, 16%, and then 36%, right? So just something to keep an eye on. 14.5 is where I do have my alert set on AMC. No further analysis here. Just wait for that alert to go off. If it goes off, great. CGC, another side chart watch. I like this setup. I like the fact that it pulled back to this old kind of support point. In fact, it dipped down just enough. Do you see how dirty this was? Look at this gap right here. It dipped down just enough here to kind of fill this gap and then gave you a doji candle and a bounce, right? And so now and that was kind of almost your validation off the 200 EMA as well. So now it's consolidating here, maybe range trading. I'd actually call this more consolidation than a range. consolidating here at the 50 EMA. So it could get rejected and come down, or it could break out and go. I see the resistance very clearly at $36. 1, 2, 3, 4. All of these candles are basically rejecting at 36. So if it gets over 36, this one can get interesting as well. You're looking at $38 and then $40 as price targets up above. Keep your alerts set at $36. If this decides to move over that price point, we have a play. By the way, if you're just tuning in, we've already talked about our main chart watch list. That's going to be XPEV, AAL, and DKNG. We're now reviewing side chart watch list stocks. These side charts have the potential to be main charts if they can open up near the price points that I'm specifying. If you've missed the earlier part of this stream, it will be available for the next 24 hours after I end the stream. So my suggestion to you is just hang out for the rest of the stream and then restart it whenever I end the stream and take it back from the beginning. All right, we've got 3 more here on the main chart, and then I'm going to get into your stocks that you're calling out. Boeing. Boeing looks good. It has looked good. Nice run up here. It has solid news behind it, right? They actually had a positive order flow for the month of February. That's what caused this run up, filled this gap area right here. You can't see it, but there was a gap between 240 and 250. It filled that gap area, ran up, and then what is it doing right now? A pullback here is something that was that's not surprising, right? Because of this big run up. So a pullback here is not surprising, but what's it doing? It's literally validating the top side of this gap area and the whole number at 250 as support. That's what it's giving you. It's basing here for the next leg up. So my opinion on Boeing is that so long as it holds 250, this looks good for a continuation play. But you don't want to buy into something and then be anticipating the bounce and it never happen, right? Or that it take two weeks to happen. So I just set alerts kind of on the way up to get that extra confirmation that the bounce actually is occurring. So I have one alert set at 260.5 or so. Because I'd like to know if it does recover from here and from 255 and pushes back up to that price point. Then I have another alert set at 255, and this is kind of the kicker alert, or 265. That's kind of the kicker alert because that will then tell me that on that particular day, if it gets there, that the stock is trading above this price action right here, this average price action here, above these where these candles are basically being rejected at. That then means that the next kind of major level of resistance will be maybe 270, 275. That's when we'll get our plays, okay, over 265. So the first alert for me is just going to serve as a reminder, hey, Boeing's breaking the downtrend, you should keep it on watch. The second alert is serving as hey man, you should probably consider taking a play. So over 265 for Boeing. If it gets there, great. If not this week, then, hey, just let it consolidate and do its thing. So long as it holds 250, it looks good. In fact, if it even pulled back and held 240, I would still say it looks good. But, ideally, you want to see it hold 250. PTON. This pattern is known as a double bottom. There's one bottom, there's two bottoms. This is also double bottoming at a $100 whole number. And the 200 EMA is right there. 3 reasons. That's 3 reasons why this has potential to reverse. 1, you have a bounce at a whole number, 100. 2, you have a bounce at the 200 EMA. 3, you have a double bottom pattern, 1 bottom, 2 bottom, which is a potential reversal pattern. You get confirmation on a double bottom when the stock breaks the neckline right there. So that's going to be that'll be your neckline right there, and your confirmation that the double bottom is valid is when the stock breaks that price point. But you don't necessarily need to wait for it to break that price point to take a trade on it. So over 120, yes, it definitely has my interest. I'm going to set my alert there right now. But I have one set at 115. It's possible to take a play over 110 even. But I do want to make sure that it gets over 110 and doesn't kind of give us a wick that fakes us out. So I'd like to see it over 114, 115 area. And that's going to serve as a reminder. And then, you know, our good confirmation level will be over the 120 mark. So this one is PTON is a definite watch. So long as it holds 100 even. As long as it holds 100, it looks good for a bounce here. You could even, and this is just, it's not really an idea, but just a scenario. If you wanted to, you know, you could take a trade. Let's say you're a swing trader, for instance, and you buy in at 108, and you think it has potential to run to 116, which this does, right? It's literally done that before, from 100 or 108 up to 116. So you would buy in at 108 with like a stop at 100, and have a profit target of like, you know, whatever, let's say the 50 EMA, 125 or 130. And that's how you can have a low risk play with a high reward play, or high reward to the top side. Not saying that it's a good buy or that you should buy, but you know, 3 reasons. Okay, the next play is the last one actually is NEO. This is a side chart watch. I probably should mention Tesla. I'm sure somebody's going to ask me a question about Tesla. But NEO, this looks like a bull flag pattern to me. The only thing that has me hesitant about saying that this is a proper bull flag is that the previous trend is like really down. But it is, like, if we're taking into account the entire trend, it's still up. So here's your bounce at the 200 EMA. Doesn't get any more clear than that. So your bounce at the 200 EMA, the push up, and then has just pulled back. So this is a proper bull flag pattern. You're seeing the pullback occur on lower volume. So if we get a breakout right here, you should see higher volume come in to kind of validate that breakout. So I just have an alert set at 44.5 for right now, and that'll serve as like my initial alert that this is moving up. The play is going to be over $46 though. Right, so if it gets over 46, that's really going to be the kicker for us, and we'll be looking for the move probably up to like 48 where that 50 EMA is, and then above that up to 50 where that whole number's at. Got it? So bull flag breakout on NEO potentially. The play idea is over 46 with a price target of 48 and then 50 in mind. By the way, I'm not going to go super in depth on this, but Alibaba, BABA, is also making a double bottom pattern. This one's kind of played out a little bit more, but Baba does this weird thing. I mean, recently, I don't know what's up with it. It's been doing this weird thing where like it likes to gap up overnight and then like consolidate and do nothing all day, and then like gap up big time overnight and then do nothing all day. With the exception of this day, that was like I should have recognized. I didn't put this on the watch list this day, but I really should have recognized that this had bounce potential at those levels. I mean, on the daily chart, it's such a gimme. Like, look at this, $226, all validated as a support here. Even most recently, validated as a support here. And then on this day, it was like, even right there was kind of validated as a support. And so, I mean, I just totally missed this whole move right here. But, you know, it happens, whatever. We can't catch everything as traders. All right, so that's all that I have for the side chart watch list. It's going to be, okay, quick review. It's a lot, but it'll be Facebook over 293, plug over 40 into the gap, AMC over 1450, CGC over 36, Boeing over 265, PTON over 115, and then NIO over 46. Yeah, that's it. Let's get into your questions here. Juice said you're leaving SPY alone, huh? Yeah, what happened? The 0-day expirations get you or something? SPY can be a blessing and a curse to trade. There's a reason why it doesn't really make my watch list, but I will trade it eventually. Like if I ever, I'm like 95% long bias trader. Like I will always analyze for a long setup, and then like if the market's like really coming down and tanking, usually I'll just like if I'm short on anything, it's usually just SPY. D-Man said, hey Gates, hey, what's up? What stock was I looking at right now? Prax answered for you. That was XPEV. If we had the week trial last week, do we still have an additional day like you said? Yeah, of course. Of course you do. I actually have everybody that signed up for the week-long trial last Monday. I didn't downgrade any of you. You're supposed to be downgraded on Friday, but I told you the market conditions last week were like, it's like super weird. And there were days where it was like, you wake up and all the analysis that you did the night prior, like it wasn't even relevant. And so when you have days like that, like I'm trying to be fair to everybody. I want you to see the server whenever we have like everything kind of going, not the way that we thinks that it will, but like when you have a good trading day, like I want you to see the server at its peak. And I feel like last week you didn't really get to see that. So yes, David, all of you have an extra day. That's going to be tomorrow. And if tomorrow sucks, then I'll give you another day. I mean, it's not that big of a deal to me. I just want to make sure everybody has a chance to make some money because, like I said, I mean, I do pride myself in being able to help others focus in on all of these opportunistic setups. And sometimes all you need is just a nudge in the right direction. And, you got to have that conviction to pull the trigger, but that nudge in the right direction to make some money. And most of the times what I find is that the members in my server will make enough money on 1 to 2 trades to cover the cost of the subscription. And plus you get to find a new trading home. I mean, my server is different from everybody else's, right? I don't know anybody that trades or that runs a server that has like a very streamlined system. It's really like a family. So yeah, I love all those guys and girls. Thoughts on PTON? Yeah, I gave you that. PTON was definitely a side chart watch. I like it as it holds 100. And then Chewy on a double bottom reversal. Let's see what Chewy looks like. Yeah, so it's literally in the same setup, right? Perfect pullback here to the 200 EMA, bounced and recovered. The only thing I don't like about Chewy that I like more about PTON is that PTON's holding at a hold number, 100, where Chewy is not, right? There's not really a hold number that it's holding. But what it is holding is this zone that it previously broke out of, which was a massive ascending triangle. So I mean, this is a case of where like this old resistance here is being validated now as new support, and it just so happens to be the 200 EMA. So this looks good too, right? I mean, you can enter a trade here if you're a swing trader with a stop below like 75. I would be cautious of earnings coming up though on Chewy. That's the only thing. So yeah, that's all that I have for you on that, Mr. Alistair. So yeah, we talked about Boeing. I liked it over 265, but hey, everybody is different. If you see it over 264, then by all means 264. But yeah, I like 265 better. G Pro finally over the 50 EMA on the max time frame format. Recent run up and looks like a strong play over 1350. All right, I would be cautious. This looks like news, right? So I don't know what the news was here, but I would be cautious on this extension of a move because remember, all right, so it is a healthy curve, right? If we back it up to the weekly, like this is not a chart that is like very parabolic because it has push-ups and drawbacks, push-ups, drawbacks, push-up, drawback, right? And that's healthy until recently. And then it just then it just takes off. Like that's kind of your parabolic move. So a push up like this tends to have larger drawbacks like that. I mean, you see it on what, AMC, right? Big push up, big drawback, but then it recovered, and right. And this is the more healthy trend. So I would just be careful of a stock kind of going parabolic like this. Nonetheless, if you're just day trading it, I mean, I don't see any issue with staying with the trend. The trend is up, then it's up, right? So you said a move over 1350. I would probably play this safe because it's literally at 1350 right now. I would probably play this safe and just wait for a break of this wick right here. So maybe 1370. So that way you don't get faked out over 1350 and then see a rejection at 1370. Unless, yeah, that's not even 2% profit margin there anyways. I would wait for a break over 13.7 just to be safe. Yeah, interesting. I didn't even know that this was running like this. But be careful of that push. What percentage gain is this? 63% in like, a week and a half or 2 weeks. So just something to be mindful of, right? The bigger the push up, typically you get bigger pullbacks. Nardle baby, that's a funny name. What is the difference between the main watch list and the side chart watch list? All right, so the main chart watch list is like they're just higher conviction plays. They're plays that look like are like about to happen right now or tomorrow, whereas the side chart watch list plays, they need maybe a day or two to set up. So let me show you an example. DKNG was on our main chart watch list. This looks like it can break 74 in one day and like tomorrow and just run, right? I wouldn't be surprised to see that happen, right? And it looks, hopefully for our sake, it does happen because that's a trade we're planning on taking. So this looks like tomorrow, like it's ready to break out over 74 and make a new high and just go. Whereas a stock like PLUG, it is a potential play. It is a play that we look for, a gap play, but it's not right at the gap area. So if this was trading, it's at $38.50 right now. If this was trading right at $40, I would say, yeah, 100% this makes the main chart watch list because it looks like it's ready tomorrow to fill this gap, right? We're going to take the play. But it's not. It's not trading up near that price point. In fact, it's down here, and so this means that if it pushes up to the area that we want to take a trade at, there's a higher chance that it hits that price point and pulls back some before going, or even rejects before going, right? And this is not what we want to be caught in. We don't want to be caught in the, oh, it could break out and then it rejects play. We want to be caught in the, yes, it's breaking out and it's going right now play. So that's the difference between the main chart and the side chart watch list. Good question. But that being said, if this opens up near $40, you better believe it'll be on the main chart watch list. Just because it's a side chart now doesn't mean it can't make the main chart. Good question. Thanks for that. What's my thoughts on MRVL? Has support at 45 and resistance at 48. I haven't looked at this chart. Support at 45, resistance at 40. Okay, so you said support at 45. All right, resistance at 48. I think I see what you're drawing those lines off of. Probably that bit of consolidation right there. I would say that the major resistance is going to be at $50, right? So that's what it looks like to me. This actually, this kind of looks like the Neo play, to be honest, where it's pulled back, bounced off to 50, and then as look how closely this play resembles this play. Can you see it? You see the resemblance, right? So, if this is if I was going through my charts, or like let's say earlier I'm going through all my charts and I'm trying to figure out which stocks to put on the watch list. If I see a stock that presents the same setup as another stock, for instance, a bounce off the 200 EMA, recovery, and a pullback into a bull flag. A bounce off the 200 EMA, a recovery, and a pullback into a bull flag. There's no, I don't have a drive to put both of these on the same watch list because they're moving similarly. So there may be another factor that is driving like these kind of stocks, right? Does that make sense? So it'd be, you typically will see this in the FANG stocks. So, Facebook, Apple, Amazon, Netflix, Google, even Microsoft. they tend to move together. And if they're presenting the same setup, then I don't necessarily want to put them on the watch list altogether. But my analysis for MRVL would be the same analysis that I have for NIO. I would just be looking for a break of, maybe the 49, or at this point, I'd probably be looking for a break of 50 to take a play on. If you're looking for a day trade, though, I think that a break of this downward trend right here would be enough to give you a trade. So you could look for a break of the 50 EMA, right, at 47.5 or even $48, and then say, well, I just want to take a day trade on it, and all you need it to move is $1 because that's going to be 2%. So, I mean, there's a ton of different ways that you can trade it. I don't know what your intentions are, if you're wanting to swing trade this or what, but I would probably just wait for like a break of this 50 and a break of this downward trend line to give you that trend reversal. And then if you're day trading it, a play over 48 up to 49 is possible, a play over 49 up to 50 is possible. But if you're looking for like extra validation for a move back up to these highs and like the bigger moves like this, I'd be waiting for a break of 50. GM making new highs on the weekly. Yeah, GM was one of those ones last week that we kind of put it on the watch list and never really revisited it. So this is kind of like an ascending triangle, right? Higher lows, one single point of resistance, bam, big breakout move. Perfect pullback to retest that breakout as support. Another move up to $60. Let me back this up on the weekly, and I'm going to go all the way to the max available. I want to see where we are at. What I'm looking for is anything that's relevant to where we are currently trading at as far as resistance goes. And I see these two peaks right here, so I want to draw a trend line there. And then I see this peak and then this peak right here. So this one's probably the most relevant to where we're currently at. I would think that a break over maybe $65 would send us up to that next peak. But if we're looking on the daily chart, we're not near 65 yet. We're actually not even over $60. So if you wanted to take a trade on GM, you would probably want to wait for it to break 60 and go, and maybe even to get a little extra confirmation, wait for a break of like 60.3. I know it's such a minute thing, like dude, you're trying to tell me to wait on a 30-cent move before I take a trade. Yeah, I am, because maybe you even want to take a wait and sit back and look at a break over 60.6 to take into consideration this peak. Like, all of these little levels are likely points of resistance. They're minor points, but they're still relevant. My overall analysis would be that on the daily chart, you need to get a daily candle to close over 60. Right now, it's having a tough time doing that. So without regard to any of these wicks, it needs a daily candle to close over 60 for this move to continue up. Why not over 118? What are you talking about? PTON? Yeah, I mean, 118 would work. I said 115 because I want to, actually I said 120, but I think that a move over 115 is like you're getting that validation already by this time. You're getting that validation that it is bouncing off 100. You're getting the validation that it's bouncing off the 200. You're getting the validation that it's on its way back up and breaking this downtrend. So I think that a move over 115 allows you to capitalize on the move up to 120. I mean, if we're thinking in percents, look, that's still a 5% move there that we could capitalize on before it even breaks the neckline. So that's why my initial alert's set. It's actually set at 114. 114, 115, just that area. I'd like to know if it breaks that level. I think there's a possible trade there. Yeah, definitely. How do I set my price target on the daily? 2%. I told you. Any move, any profit. I do what's called a profit target trading strategy. If you have, always have a designated profit target in mind when I take my trades. So I think probably 8 out of 10 times that I take a trade, I'm scaling some off at 20%, if not selling the whole position at 20%. And then I don't care what it does after that. I don't care if the stock runs, another $30. Well, okay, that hurts and it happens, but I'm not I'm not looking for those 100% big bangers and massive day trades where you get 1,000% gainer in one day. And it's just not my style. It's not who I am as a trader. It's my belief that we're retail traders. We're not here to move stocks or to make big plays happen. And I guess unless you're part of the Wall Street Bets community, but typically that's not the case. And we're just here to take our slice of the pie, right? We're just here to get a bite of the pie, if I'm being honest. So 20% is a profit target. That's where I plan to take my profits. And typically, a move that is 2% on a stock will yield a 20% profit on your strike price if you're trading weekly options. Thoughts on SQ? Reverse head and shoulders. Oh, wait, hold on. I skipped a few, didn't I? I was trying to get creative and start swinging. Do I like trading using the 15-minute time frame? No, I don't. I don't ever refer to the 15-minute. That's just me. So I use the 5-minute, the 1-minute, the daily, sometimes the weekly, and if the case calls for it, the monthly, but rarely the monthly. Thoughts on SQ inverted head and shoulders? SQ inverted head and shoulders. So you have to tell me what time frame you're seeing this on, because I don't see it here. I think I see it. You're talking about that point right there, that point there, and then that point there. So that's going to be left shoulder, your head, and your right shoulder. And then this usually, the way this pattern is designed to work, I guess, is you'll see a move like this, like a recovery move back up. I don't have any thoughts on it. I see it. It's there, right? So it's like you got little peaks and valleys, inverted peaks and valleys. I don't know. Just wait for a break of 250, I guess. Really, over 260, there's a gap. So that's where my alert's set. So I don't have any problem waiting on this. SQ, it's doing a lot of chopping around right now in this like general area. So like I mean, if we're trying to encompass the majority of this price action, and then I just clean this up a little bit, like all of this is just considered chop to me. So I really don't care like what it does in this area. Once it gets over 250, it'll be interesting. Once it gets over 260, it'll really be interesting, but I don't care what it does right here. It's the same with NVIDIA, which is unfortunate because I used to love trading this stock, and then like it just stopped moving. It did. Look at all of this consolidation. For how long? How are you supposed to do? And then we got like a breakout, right? And that was fun, but then it just came all the way back down. And in fact, like faked you out, like it was going to break these lows but below the 200 EMA, and then reversed. So I mean, it's like now just giving us a very wide range of nothing. So the stock's pretty much dead to me until it decides to pick a direction. That's the way I feel about SQ. Sorry if that's harsh, but 250 is the mark. So it either needs to break 200 or 250 to have my interest. Really, a break over 260, then I like that. Do I play those during the pre-market? No, I don't. So I'm I trade options, I day trade options, and you don't really get to trade any of those pre-markets. So I just wait till open. If anything, I actually wait like at least 5 minutes after open, unless the setup is really fire, and then I'll take it at open. But that's kind of rare and risky. But yeah, I mean, one of my rules is to wait 5 minutes after open, and so sometimes I'll wait like 10 minutes. I'll go like make a bagel or something, and then come back. It keeps me disciplined. All right, last question. We're almost at the 1 hour mark. I'm going to end it here. When I play a 2% move, I'm guessing you're playing a weekly option. That's correct. Do I consider any of the Greeks at all? Yes, I consider the delta. Or do I choose a certain strike price and wait for the move to complete? Nope, I trade off of the delta, right? So you go visit in the Discord server, visit the Q&A channel, and then click on the pinned messages in the Q&A channel. I answer this question in like a lot of detail, right? You're gonna have to scroll down a little bit on the pinned messages, but you'll see it. Somebody's already asked me that question. It's a great question, but yeah, I've already answered it in like a ton of detail. So you'll find your answer there. Thank you everybody for your time. I hope that we have a good week this week. I hope that we're all able to make some money. If you tuned in late to the stream, I have all of this recorded, or it will be up and live immediately after I end this stream. So it'll be up for the next 24 hours for you to review on your own time. I talk about the main chart watch list stocks. I talk about a lot of side chart stocks. And then, of course, I do everybody's technical analysis at the end. So, you know, even if you just want a review on technical analysis, I'm sure if you rewatch this, there are some tips and tricks that you can pick up on that I've talked about here. So I will see you all in the morning. Keep an eye out for the watch list being posted with the exact trigger levels. And let's make some money.